to turn the TV down and talk about these Sasol results?
Yeah, I think you have to put it in perspective. I mean, the raw numbers are, people will look at it and say, headline earnings per share down 51% to £10.67 a share. And they'll talk specifically about, maybe the dividend. People are a little bit happy about that, actually increased a little bit. But I think you need to put this, if you could put the overall last 24 months into perspective in terms of oil prices, which is their big, and the rand too.
So in other words, you shouldn't have expected too much. Obviously these results were going to be poor because it took in a period where the oil price absolutely collapsed down to that sort of $35 a barrel level. The rand was all over the show, alternately strong, weak.
I've got here the comparable years, $84 a barrel for last year, and average this year 71. And also, you've got to consider the rand dollar rates, 7.64 this year and 8.88 to the dollar in 2008, which makes a big difference.
Yeah, and in terms of their share price specifically, they peaked in June, July 08 at over $500 a share, but that's when the oil price was $147 a barrel.
So to put it in perspective, the reason we're having this conversation, people have been a bit grumpy and saying, well, why don't we just move out of them, is in fact because the share price has done nothing. We know we get this all the time. People say, well, why are we in this one? Because it hasn't been moving. It's been hanging at this level for how long? 12 months, 15 months?
Longer, in fact, since kind of January 09, they haven't, since they fell off towards the end of 2008, they've kind of been at these levels there and thereabouts. It's poked its head up above 300 a couple of times. But I want you to answer that question. Why do we actually like Sasol specifically?
Well, obviously we're positive about the oil price. We're positive about the technology and the idea that all the cheap oil's already been found. And we know that they've got this great technology and there's lots of coal, especially in countries that have got rising demand for the finished product, the petroleum products.
You're talking places like Indonesia and India, those types of places.
And not to forget places like the US and Australia as well. So that's the long-term perspective. We know that this business has got a big revenue footprint. It's got those chemicals businesses which never do anything and they don't talk about.
Although that did pretty well this time round.
Yeah.
Did a lot better.
But the real gem in the crown is, of course, the Synfuels business, which produces liquid fuels from gas and coal feedstock. And the idea is that ultimately this thing can develop this business model globally. Now, let's be fair, it's been slow. The Qatar-based Oryx plant came on, took a long time. They bulleted the one in Nigeria as well, that's gone. We know that there have been a bit of rumours about lengthy time processes with the approval of projects in China. But ultimately, in, 5 years, 10 years or something, the idea is that this thing will be a global player because oil prices will consistently be at $100 plus and it'll have this great technology and it'll have all these joint ventures around the world. It won't be singly dependent on South Africa in terms of its earnings. And it'll be a credible business, and by then even, who knows, might have been taken over by Chevron, Texaco.
But some of these projects are 5 to 7 years out. You can specifically own Billiton and have a far bigger exposure to the oil market. Although Billiton is a diversified mining company, you've got a massive exposure because they've ramped up their petroleum division.
What's Billiton's market cap by comparison to Sasol's?
Sasol's under, it's around $27 million.
$1 billion.
$1 billion US.
I know Billiton's petroleum, their revenue is $4 billion from petroleum. And profits to 2.3 billion.
I guess what I'm trying to get at is Billiton's oil division is pretty subscale by global oil titan company standards, but it's not insignificant. Sasol, I'm thinking, Sasol could be a much bigger player globally in due course. Although it's obviously like the equivalent of being in harmony as compared to AngloGold, because Billiton has got very profitable oil assets, whereas Sasol is really only hugely profitable like this at relatively elevated oil prices.
Okay guys, but what about the environment? We're looking at a long-term view here and the carbon emission taxes, but I suppose they do sponsor the Springboks, who wear green, so that counteracts.
Come on, Lauren. Paul, you answer that question.
Well, I don't know, I think it's a good point. Because if there were aggressive carbon tax issues to arise, then they are going to face serious problems. It's going to raise the cost of their output, which means it raises the level at which it becomes payable oil price-wise. But then again, they are involved with various carbon capture technologies, and as far as we know, South Africa and these other countries they're going to, like China, are still in the sort of developing country type group and will probably be given the benefit of the doubt on a 20-30 year view until such time as these things tighten.
So what's your conclusion, ultimately?
Look, this is a good company with long operating experience and substantial intellectual property in terms of the technology, and under the right circumstances it could be a huge success story in years to come. I think the chemicals business is a bit here nor there. I'm not ruling out further expansion in South Africa. We know that the expansion at Secunda and the expansion in terms of a new coal to liquids plant could be significant. But it's kind of like taking a long-term bet on elevated commodity prices and the technology story. So I think it does add something extra to the portfolio, but look, it depends on how they execute. If we have major setbacks in terms of the China rollout, or if we have additional operational problems, or they can't get a new plant up in Indonesia or Kazakhstan and all these other places that they're looking at, then maybe there will come a time when an alternative oil investment would be perfect.
But for the time being, hold on to the existing ones you have. Is that the message you want to get across?
Yeah, because I think under more normalized environment, although that's obviously a bit of a subjective term, I think the earnings will be quite strong. So I wouldn't be surprised to see just earnings in this expansion phase drive them back to 400-500 rand a share against the backdrop of that bullish oil forecast.
Good.